Hey there, speculators. It's Rod, your Futures Fanatic. Welcome back to the Futures Fanatic channel here on YouTube. Futures Fanatic is part of TDG, that's the Traders Dev Group, where we provide education for active futures traders and self-directed investors. Hey, in tonight's video, I am going to do a little bit of training on one of my strategies. I haven't done that here in a while. I'm not posting as many videos as I should, so we're going to talk about that. And then also, I'm going to quickly mention, I get my little bubble here, and I think that everyone that follows the Futures Fanatic channel or is involved in trading at all or interested in futures knows immediately what prop trading is, and that's not necessarily the case because I sent out an email last night to about 3,000 people. I had a lot of questions about really what that is. So let me cover it tonight and tell you about an opportunity that you probably don't want to miss, and it's just good for the next couple days. So this video will be a little bit time sensitive. All right, so let's go over real quickly to, let's see, right over here. And let me just tell you briefly what is the term prop. It stands for proprietary trading. One of the biggest challenges if you are passionate about the markets and want to learn how to trade the financial markets for daily income or supplemental income, or eventually to even go full-time, quit your job, that whole scenario, which by the way, you need to have the right expectations on things like that. Prop stands for proprietary. It simply means that these are companies that will give you money to trade the markets. And in this case, the instrument is the futures markets. There are also programs like this for Forex trading. The thing that I'm showing here is actually from a firm that's called Earn to Trade. I'm a partner with Earn to Trade, and I will tell you a little bit about the deal that they're running right now because it's one of the best I've seen in quite a while. But really quickly, what is retail trading? Well, retail trading is normal trading. It's where you have to put up your own money to trade. And especially if you want to trade the stock market, where a lot of stocks are very expensive, you have to come up with quite a bit of capital. You're also putting, of course, your own funds at risk if you're doing retail trading. You open an account with a brokerage, you deposit money. And one of the common questions I get is, what's the minimum I should start with? Well, how about not worry about that and instead consider letting somebody else fund your account once that you've proven that you are a good risk-adjusted trader. And then finally, you're going to need a platform. You're going to need to learn that platform. You're going to need data. Those are all sort of the drawbacks to starting and trading in retail. With prop trading, you only need the evaluation monthly subscription to get started. That's it. And as I'll show you in just a moment, what Earn to Trade is doing, this is very, very insignificant, especially for everything that you get. The next is that the prop term is going to take all the risks. Once you have a funded account, there is no risk of your own capital. There's a split of profits, but you don't risk any of your own capital in the program. And then finally, they give you the license. They give you, by that I mean the license for the platform and the data that you need. You do not have to be licensed or registered in any country in the entire world. I'm pretty sure. You certainly don't in Europe, Africa, Asia, the United States, Pacific Rim, all the major places you're probably watching this video from. You don't need to get any kind of license or registration to be able to trade the firm capital if you pass their evaluation. That's what prop trading is. It's extremely compelling, and if you have never heard of it before, you want to try to reference this video that I'll put right up here. 5 prop firms to take a look at, but tonight we're going to be talking about just this Earn to Trade. So let me tell you about what they're doing. I don't want to make this whole thing a commercial. I want to get into the training in just a second. So over here, this is the way their programs work. You select a dollar amount here. I generally recommend this $50,000, and this would cost you $170 per month. If you look at the description below, I will pin a comment and also put in the description below. For the next 48 hours, maybe, I think it expires actually tomorrow. So jump on this if you're watching. I'm making this video on Wednesday, September 29th, I believe. You get 50% off, and this is for as long as you're in the program. You can pass these programs in as little as 15 days. I generally don't recommend that at all. We talk about no rush, no resets here at TDG and the Futures Fanatic channel. So $85, I think I'm doing my math right. All right, it doesn't even make sense to buy the smaller one because this will be $75. For $10 more, you can get a little bit of buying power, and you're going to be competing for $50,000 in buying power. The other sweetener here is if you do this through the link that I'm putting below, you can stay in my trade room, which is a $1,500 value. That's the lifetime membership to the trade room is $1,500. You can hang out in there and trade with us for as long as it takes you to pass these programs. All right, and I'm only leaving that open until Friday. So Jump on this right now if you've done your research or you're interested at all in getting access to capitals. Even if you know nothing about the futures markets, you gotta have to trust me, this is a really, really compelling investment. $85 a month to get access to a platform. By the way, look at everything you get here. You get their Finamark license if you want it. That's another trading platform. You get all this educational content. Let me show you the educational content. And by the way, I'm going to be doing this with you. I do all the programs that I recommend. So here's a $50,000 when I'm about 7 days into this, and we're going really, really slow. 1% of the 6% gain, 6% profit target. Go to lessons real quick here. You can see they have, I don't know, 28 fundamentals lessons. Go to advanced. They have another, I mean, we're talking about 62 videos that you get here. 62 videos. That's pretty darn compelling. The data fees, which are worth $55 a month, you get access to a trading journal. This is a great program for $85, and it's not a discount on the first month. You get this discount for as long as you are subscribed under this program. Take advantage of it now. Everyone needs access to capital. Don't risk your own capital. Learn more about prop. This is a great deal. That whole thing sounded like a commercial, and I am 5 minutes in, so we're going to do 5 minutes of quick training over here. All right, this is TradingView. TradingView is one of my favorite platforms for charting and analysis, and I'm going to talk tonight about the stay in your lane strategy. I also call this the 534. What you need for this is you need access to TradingView, and you need to understand how to apply the right indicators. So you're going to go over to TradingView. I'll also put a link down below. If you don't yet have a TradingView account, you can sign up for a TradingView account for absolutely free. If you want to save a little bit of money, I have a link down below to how to do that. All right, the indicator that is on here is called VWAP Standard Bands V2 Mod Update. Okay, I'll put that in post-production so you can get access to it. You're going to apply that to your chart, and that is going to give you this exact look. Now, when I say this exact look, I have my charts dark. I've modified some of the colors here. Your mileage may vary in terms of that. You can choose any color you want. Doesn't matter. But what I want to talk about tonight real briefly is this concept of situational fluency and market awareness, okay? The idea that you have to eventually develop an understanding of market conditions that are favorable to your particular trading strategy and market conditions that are not favorable to your trading strategy. There's no magic wand you can wave. There's nothing I can tell you for how you develop that. It's really how do you get to Carnegie Hall? Practice. You're going to need some screen time here. The reason I wanted to talk about the stay in your lane strategy tonight is because I am situationally aware, and if you've been following the markets for the last 2 weeks, we finally got a little bit of range expansion and volatility. Hence, what we're looking at is days in which we're going to have inside days, days in which the price action following a big day, like yesterday, the market was down, the Nasdaq was down almost 500 points yesterday. The S&P was down almost 100 points yesterday. So on the stay in your lane strategy, what we're looking to do is buy low, sell high, and for price to stay inside of a range. And why would we have any idea to know that today we would touch the bottom of the bid zone, almost the top of the offer zone, the bottom of the bid zone, almost the top of the offer zone, down to the bid zone, and right back up? You could not ask for a more perfect day for range trading than what we got today. How did I know that this might be a good day? Well, I knew it could potentially be a good day by two factors. The first factor is just understanding the market context, having some situational fluency. This is the prior session's high, 44.43. This is the prior session's low, 43.35. Okay, it might be a little difficult to see, but that's almost, I'm not all that good at math, 334s to 439s, that's 105 points, right? 105 point range. If you're not familiar, that's a range expansion day. The average range right now on the S&P has been expanding. It's about 60 points. So that's almost 180% of the expected range. So a big expected range. Following that, there's a higher probability that price stays within that range. Now, we could have broken down below the downside here of 43.34, but the probability of getting that entire 100 points back is low. It can happen. We get V-bottoms all the time, and you can see vicious V-bottoms to the upside following sell-offs. But I'm going into the day expecting a range day on a 30-minute and 60-minute time frame. So when I come over here to my trading time frame, which, by the way, this is a 5-minute chart of the MES, the micro S&P stock index futures, is trades for $5 per point. So it's a very approachable contract if you're not familiar with it, and you can trade this in the earn to trade account. Okay, you Can't trade this platform yet in Earn to Trade, but you might be able to soon. So sign up for your Earn to Trade account. Get yourself that juicy discount. Come join me in the room. Learn the strategy in more detail because we're just going to go through it briefly tonight. All right, so the bid zone is down here. This orange line is VWAP, volume weighted average price. If you haven't heard about that, you can Google VWAP. Plenty of information about VWAP. It's volume weighted average price. It's going to look like a moving average. This dotted line here is 1 standard deviation, and up here at the top it's 2 standard deviations. Down here 1 standard deviation from VWAP. Down here 2 standard deviations from VWAP. So this is our bid zone. This is our offer zone. What happened here this morning is the market came down, almost touched the bottom of the bid zone, and then rocketed up within 20 minutes, 15 minutes, all the way. These are 5-minute candles, all the way up to the top. So we were long here campaigning, caught some off at VWAP here, came all the way up here, and then we were not able to make a new high, and we stayed within the lane. Perfect, perfect, perfect. Now, I'm not interested in all this, even though this was 10-point movement, 10-point bars. These are $50 opportunity per single contract, $500 on a larger contract. What did I do? As soon as I saw this, it held here, I thought, hey, this would be great if we finally got some two-way action and we actually stayed in this lane. I immediately started to rest orders down here at the bid zone. Got filled here, got filled in here, held because we did not hit target up here, got more in here, and yes, we did make an undercut low, but we still held this level, and then look, all the way back up to the offer zone. All right, all the way back up to the offer zone. Took profits up here, and then rested orders all the way back down here for a very, very nice, again a little bit of heat, campaigned around, and then we closed up about 8 to 10 points higher than my average entry point here. Last Monday, we actually went 50 points higher off of the bottom of SD2s, which is the bottom. I call this SD2, standard deviation 2, -2 on the downside. So stay in your lane. When does it work? It works when the market stays within 2 standard deviations. How often does the market stay within 2 standard deviations? About 75% of the time. When does it not work? When the market breaks out of one of those 2 standard deviations. However, if you have situational awareness and market context, and you are aware that on a higher time frame, there's a high probability that we stay within that range, there's a higher probability today that we're going to stay within this range. Do you always get 3 perfect cycles during the day? No. I mean, this was absolutely a fantastic day, and really the last week and a half has been great for range trading. It happened too, and the Nasdaq actually broke out, gave you a little bit more pain here, and is not nearly as perfect today as the S&P was. So stay in your lane. Apply the indicator that I'll put below, which is available for free in the public library here on TradingView. And we trade the same strategy over on NinjaTrader. If you want to learn how to do that, make sure you subscribe to the channel here if you're not already. Only about 15% of people that watch my videos subscribe. So please do subscribe if you made it this far. Not only we have training and education for active futures trading, but also try to be bringing to you some of these opportunities in firms that I use and trust, and I can recommend. So subscribe. Like the video if you like this. I've been told now that even if you don't like it, interact, because any interaction, even a thumbs down, please don't give me a thumbs down. It makes me sad. No. The only criticism I get is rambling, and I might be rambling a little bit right now. I definitely talk fast to try to pack in as much as I possibly can. All right, that'll be it for tonight. Check out Earn to Trade. Look at the descriptions down below. $85 a month gets you all kinds of goodness in their program, and also free in my room for as long as, and I trade Monday through Friday from 6:15 a.m. till 8 a.m. That's Pacific Standard Time out here on the left coast. I would love to see you in there. That opportunity to trade with me expires this Friday, and only if you sign up for one of those programs. So that'll be it. Let me come back to here. Appreciate you. Stay green. Trade like you mean it. We'll see you at the next one. Thanks.